Okay, let's move on to the missed trades tab. So I want to quickly define what a missed trade even is. So a missed trade can only apply to trades where you used a limit order to try to enter the trade. Because if you use a market order, the trade is guaranteed to be filled, right? But with limit orders, some of your trades will be filled, some of your trades will not be filled, right? So it only applies to limit order entries. So a trade is classified as a missed trade if price touches the take profit point without actually me being in the trade. So at this exact candle, this is where I would have got the entry trigger, and I would have placed the limit buy order directly on this black line. And the goal here is I'm hoping that price would retest the black line. I would be filled into the long position, and then price would push up, and then I would take profit. But since it never actually came back to the black line, I would have never been filled on the trade, as in my entry was never actually executed. So price just pushed up, it hit the target, but I wasn't actually in any trade, therefore I missed the trade. So as soon as price touches the my plan for the take profit target, this is where I would just cancel the order and flag the trade as a missed trade, right? So trades that don't count as missed trades are the ones where, like, let's say I stand up and I leave the house for a little bit and then I come back. Trades that occur while I'm not in front of the computer, yes, you can argue that, yeah, maybe they are missed trades. But in this specific case, for this specific tab, we're not going to be tracking those. We are only tracking the trades where we got the entry trigger, we tried to enter the trade, and price just never came back to our order, and price went to the target. So it hit the target before actually coming back to the entry. That's when it's classified as a missed trade. And I'm going to explain why we keep it so specific for this tab. So in this specific section, we're trying to see what happened after the trade was missed. So after price hit this level and I've missed the trade, we're trying to track what happened next, or which outcome happened first. So there are two possible outcomes. Did price travel an extra 1R beyond the target? So if it's long, did it travel an extra 1R to the upside? Or if it was a short position, did price travel an extra 1R to the downside after this point? And the second outcome is just the opposite. Or did price travel 1R towards the stop loss first before hitting up here? So we're basically asking the question, which point did price hit first? Up here or down here where the entry was? Now for this specific example, it did not manage to travel an extra 1R to the upside. Instead, the point that it hit first was 1R down towards the stop loss. So it hit it right over here. So I would select it traveled 1R towards the stop loss. Let's look at the second example. So for the second example, the trade was missed. So as soon as this red candle came in, or black candle, as soon as this down candle came in, this is where I would try to enter the short position, but price never came back to the level, and it just hit the target. So since it hit the target without me actually being in the trade, I would need to cancel my order, and I would take the screenshot and throw it into the missed trades tab. Now, the next question is, well, after the trade was missed, did price travel an extra 1R beyond the target, or did it travel 1R towards the stop loss? So let's see. Price traveled 1R beyond the target, and it hit it somewhere around here. So I would flag it traveled 1R beyond the target. And over here we have some statistics. So here's why the statistics can be really, really interesting. So the first thing that you could do is you could group all of the trade screenshots where price traveled 1R beyond the target. You could then create a second group of trade screenshots where price traveled 1R towards the stop loss. Now you could feed all of those trade screenshots to ChatGPT or whatever AI you prefer, Claude, whatever, and you can ask it, what are the main differences between these two groups of trade screenshots? Because see, when price travels far beyond your target, rather than it instantly reverses and comes back to your entry or goes back to the stop loss, it's showing you that there's more juice left to squeeze. out of this move. There's something happening. Like if I was to open up the first one, notice how this one just reverted back to the entry, right? So was this move super duper strong? Not really. But this one moved far beyond the target. So the strength of this move was a lot, it's a stronger move, right? So by comparing the differences between the trades where price traveled beyond the target versus the trades where it just barely hit the target and then it turned around, you'll be able to get a better understanding of what are the core patterns, or what are the repeating ideas in your trades where price has a lot of strength behind it versus it doesn't really have that much strength behind it, right? So the more trades that the more missed trades you'll be able to review comparing between where price exploded far beyond your target and it didn't really move that much beyond it, you'll be able to understand what is the strength of the move, or what determines how strong a move actually is. So that's the first useful thing you could use it for. Another useful thing you could use it for is you can compare the statistics of how often price moves beyond your target compared to how often it moves towards the stop loss. Now, here's why this can potentially, not guaranteed, but why it potentially can be very interesting. Now, pretend hypothetically that you have 100 missed trades. Okay, you've collected 100 missed trades, and your stats look something like 80-20. So you've got 80% of the time when you miss a trade, price moves an extra 1R beyond the target, and only 20% of the time, price actually turns around and moves 1R towards the stop loss. This would be a really, really interesting statistic to have for your strategy, because it basically shows you that there is a potential second strategy hiding within your data. Let me explain. So let's say you try to enter this trade. So you try to enter it. It never comes back to your entry. It misses. But you have the statistic, or you have the knowledge that there is an 80% probability that price will rather move down to here rather than back up to here to the entry. If there is an 80% probability that price would rather move 1R down rather than 1R up, what you can do is, after the trade has been confirmed as missed, you can attempt a second entry. So you can try to re-enter right here with your target 1R down and your stop loss up here. So the stop loss wouldn't be up here, it would be right here. Now, why would this be effective? Because you literally have the statistics showing you that if you were to do this, you would have an 80% win rate historically, right? Now, most of the time, from what I've observed for most strategies, you can expect this to be fairly evenly distributed with no statistical edge, right? Most of the time, this is what will occur. But some of the time, there will be a little bit of a skew, and when it's sometimes skewed one way or the other, it is worth investigating. Alternatively, you can look at, so this is like for your average statistics, but since we're filtering for just specific coins and also for specific strategies, you can grab all of this data, give it to AI, and maybe your statistics for everything averaged out might be 50-50, but for one specific coin or for one specific strategy, it might be actually heavily skewed. And the insight might be, okay, I can't do this all the time, but I might be able to do this only for one specific strategy. Like, I can get away with a second entry only on this specific strategy, but I can't get away with it on another type of strategy. Okay, so the main point is that if you're not only tracking the trades that you take, but you're also tracking the trades that you've missed, you'll be able to find more insights at a faster speed and also improve your performance at a slightly faster speed as well.